Hey guys, welcome to another lesson of accounting. Today we are continuing with the November 2017 paper. We'll be doing question 2, which is on manufacturing. Let's dive in. So in this question here, we are given information relating to Gavin manufacturers. The business produces wooden tables, and then you are required to do something. So the first thing that you're required to do is a production cost statement. And then the second thing that you're required to do is to do an abridged income statement. So let us go. So, a production cost statement, the way it looks like, it will have, when you're doing a production cost statement, you have your direct material cost, then you have your direct labor cost, and then you have your prime cost, and then you add your factory overhead cost. And then after that, you add your work in progress at the beginning of the year, and then you subtract work in progress at the end of the year, and then you get the total cost of production. So let's go and first find the direct material cost. So let's see. So in the first information, we're just given information about work in progress at the beginning of the year, and also finished goods stock at the beginning and at the end of the year. And then second information, that's very useful. So we are told that 7,200 tables were produced at a unit cost of 230 each. So that already gives you that the total cost of production is 7,200. 7,200 multiplied by 30. So that will be the total cost of production. By the way, total cost of production is at the end of this. So we know that we're gonna have to end up with the 7,200 multiplied by 330. All right, but we are still trying to find the direct material cost. So the direct material cost, they say costs, and they say before adjustments, and then they say payment. So you have the direct material cost here for 1,050,000, and then let's read the adjustments. Payment to ease transport for 102,000 was incorrectly allocated to selling and distribution. And then they say this was meant for delivering the wood to the factory. So we know that a cost of an asset is the purchase price plus other costs incurred to bring that asset to the place and condition for use. So in this case, we paid transport to bring back raw materials. And then instead of adding that to our cost of raw materials, we instead added it to selling and distribution cost. So we need to redirect that amount and add it to direct materials. So for direct materials, we're gonna have, so for direct material, we're gonna first have 1,050,000. And then we're gonna have to make that adjustment and, we have to make the adjustment and make sure that we include the amount that was paid to transport raw materials. And the answer that you're gonna get is 1,152,000. All right, cool. So we're done with the direct material cost. And then the cleaning factory for the equipment. So that is to do with factory overhead. At the moment, I'm trying to find direct labor cost. Direct labor cost, they've given us a question mark, so we're gonna have to find a way to calculate it. And then they gave us additional information and said that prime cost after the adjustments have been made is 1.8 million. So we're gonna go to prime cost and put the 1,800,000, and then the direct labor cost will be the difference between the direct material cost and prime cost, because in order to get to prime cost, you would have to add the direct material cost and the direct labor cost. So to calculate this, we would just say 1,800,000 minus 1,152,000. And then we would get 648,000. So it's 648,000 for the direct labor cost. And then we move on into the factory overhead cost. So with regards to the factory overhead cost, we have an amount that's already been given here, 487,200. And then we are given some information relating to factory overheads. So the information you're given here, they say the cleaning contract for the year amounted to 126,000, was shared between the factory and administration in the ratio of 2:1. So it was shared, so it's already included in that amount of factory overheads. And then they say, however, 80% should have been allocated to the factory. In this case, what we did was we divided that 126,000 in the ratio of 2:1. So 2:1, the total ratio would have been 3, which is 2 plus 1, and then what was going to be allocated to the factory would have been 126,000 multiplied by 2/3. 2/3 is about 66%, but what should have really been allocated to the factory should have been 8%. So what we need to do then is to calculate firstly. So the first thing that you're going to calculate is how much of that 126,000 is included in factory overhead cost, and then we're going to calculate how much should have actually been included. And then when we find that difference, then we're going to adjust with it. So I'm just going to calculate on the same page so that we see all the amounts. So we should have said 126,000. So this is how we allocated. This is how the allocation happened, because they told us that it was allocated according to the ratio of 2:1, and 2 plus 1, that's 3, and then the factory gets the 2 of that, and then the administration get 1. So 2/3, that will give us 84,000. So we allocated, so 84,000 of this 126,000 is included in this 487,200. And then let's go and say what should have actually been calculated is that what should have been included instead should have been 126,000 multiplied by 80%. And if it should have been 80%, then our total would have been 100,800. So can you see what happened here? What happened here is that instead of taking this 26,000 multiplying by 80, we multiplied by 2/3, and as a result, instead of including 100,800 in the factory overheads, we included 84,000. And therefore, the way to fix it would be to go to factory overhead costs and say 487,200, and then we would have to minus the 84,000 that was wrongfully included, and then we would have to add the 100,800. And then what we would end up getting would be, we would end up with 504,000 for factory overheads. 504,000. And then we would add prime cost plus factory overheads. And what we would get then is, 2,304,000. And then what you need then to do after that is to add work in progress at the beginning of the year. So work in progress at 1 March 2016. So let's find the work in progress. So it's in the first piece of information. So they say work in process is 160,000 at the beginning of the year. So since it is 160,000, we need to add that to our 204,300. So we'll add 160,000, and then we'd add this 2,304,000 plus 160,000. That gives us a total of, it gives us a total gives us a total of 2,464,000, right? And then let's try and find the work in progress at the end. So work in progress at the end is not given, so it will be the balancing amount. So let's just put here work in progress at 28 February 2017, which is the end of the year. It is not given. If it was given, we were going to subtract it from this amount and then we'd get the total cost of production. But you know that we already have information to calculate the cost of the total cost of production, and that is we would need to take the 7,200 and multiply by 330. So it would be 7,200. Sorry, I'm putting it in the wrong space. So this is the total cost of production. And you would take the units produced and multiply it by the cost of 330. And that would give us a balance of 2,376,000. And then we'd have to find the difference between this amount. So it would be 2,464,000 minus 2,376,000. That would give you 88,000. And then we'd come in here and say 88,000. And that would be your production cost statement. And then in the next video, we're going to be answering the abridged income statement. Thank you for joining. Tune in in the next video. Thank you.